Hello everyone, welcome back to our channel. I'm Pallavi Sehgal, and in today's video we're going to discuss the key acquisitions that happened within the luxury industry in 2023. We had a lot of acquisitions that did happen given the macroeconomic and microeconomic conditions, but at the same time there are some key acquisitions that will change the way the luxury industry operates within the next few years, and we'll focus on those key acquisitions, which are Tapestry's acquisition of Capri, Kering's expansion into Creed and Valentino, Farfetch's rescue by Coupang, and Frasers Group's acquisition of the Matches fashion. Today also, I am going to refer to my newsletter on LinkedIn, that is Strategy and Marketing Newsletter. And within this newsletter, we're going to focus on the case study of key acquisitions within the luxury industry in 2023. So let's get started with what happened in 2023. Definitely, 2023 was a landmark year because of the acquisitions that we talked about. Let's talk about these acquisitions in detail. First and foremost, Tapestry's bold move into acquiring the Capri Holdings. Tapestry is the brand that has Michael Kors, Versace, and Jimmy Choo. And it's the addition of these brands into portfolio that Tapestry already had, which is Kate Spade, Stuart Weitzman. So bringing all these brands together, the company's annual sales will surpass 12 billion, and it's estimated that it's going to have operational efficiencies of around 200 million annually within the next 3 years. So this acquisition marked a significant leap for Tapestry, especially in its quest to become a dominant player within the fashion industry. When this acquisition did happen, a lot of articles came about saying that Tapestry might be the LVMH of American luxury industry. But actually, I would like to say that, and I would like to point out that Tapestry, the brand Tapestry has and the brands LVMH have are very different. The brand Tapestry is mostly focused on is more of aspirational luxury, especially when you talk about Tapestry's own brands. But when you refer to the Capri brands, which are Versace, Jimmy Choo, and Michael Kors. While Michael Kors is more of an aspirational luxury brand, Versace and Jimmy Choo both can be categorized as luxury brands. So, although the move does give Tapestry an edge, especially in terms of the American retail luxury space, but comparing it to LVMH or Kering or Richemont is a bit far-fetched, in my opinion. Still, that is something that will change how the American luxury industry functions. Next, we wanted to move into Kering's expansion into Creed and Valentino. Kering has been on an acquisition spree in terms of strategic acquisitions. It has been investing in a lot of companies which it does see will be power players in the next couple of years. And that is why it's strategically investing into those. It also invested in the resale platform, which is Vistar Collective. So those are all strategic investments, which might turn into acquisitions in the longer run. Here in Kering's acquisition of Creed and Valentino. So for Creed, Kering bought the brand Creed for 3.5 billion euros, and it bought 30% stake in Valentino for 1.7 billion euros. Now, these are strategic acquisitions, as we always said, and it's a broader plan to diversify and strengthen its luxury portfolio, especially when its star brand like Gucci is not performing the way it used to perform in the last couple of years. Much of the growth at Kering has been Gucci driven, and now with the slowdown at Gucci, Kering had to take into account what other avenues are available for revenue growth. So given that, we can say that the integration of Creed and Valentino signifies Kering's commitment to expanding its influence and reach in the high-end luxury segment. The third acquisition that we wanted to focus on was Farfetch's strategic turn with Coupang's investment. Farfetch, as you all know, was once at the forefront of luxury e-commerce, and it has embarked on a transformative journey now with a significant investment of 500 million from Coupang. This crucial investment helps Farfetch avoid um, the bankruptcy that it could have been subjected to if it had not had this investment from Coupang. Now, what is going to happen next is that the company plans to delist and its transition to private equity. The partnership with Coupang is poised to breathe new life into Farfetch, potentially altering the dynamics of the online luxury retail. And the last acquisition that we wanted to focus on was the Frasers Group acquisition of Matches Fashion. Now, Matches Fashion was acquired by the private equity fund Apex for approximately 1 billion euros. And the fact that it was sold to Frasers Group for just 52 million pounds marks another significant shift within the luxury industry sector. Why? Because we are seeing all the brands that were focused on only online e-commerce. Um, so those are the brands that have seen a major downturn within the last few years, especially after the pandemic. During the pandemic, these were the brands that were performing the best. But after the pandemic, these are the brands which have had to endure the most significant downturns. Now, the acquisition promises to bring new synergies, leveraging Fraser's expertise to drive Matches Fashion growth. And the acquisition is indicative of ongoing consolidation in the luxury sector. So, next we wanted to focus on why are the brands doing this? First and foremost is the scale motive. The more scale that you have, it leads to not just about expanding the market share, but it also helps in gaining leverage in the retail leases and shipping arrangement. And the benefits of scale become increasingly pivotal when you compare how much these benefits help the luxury groups, the luxury conglomerates like LVMH, Kering, Richemont. So this basically, the more scale that you have, the more bargaining power you have in terms of negotiations, and the more you have in terms of operational efficiencies. And that is why we are saying that these mergers reflect a strategic response to the competitive pressures in the luxury market, emphasizing the importance of scale in today's business environment. But still, all said and done, there are complexities to corporate mergers, and we saw that in Macy's, we saw that at VF Corp, which took a substantial investment in terms of Supreme. But at the same time, now it is being said that VF Corp might look into offloading Supreme to another player, strategic or private equity, in the coming few years, just to make sure that it is able to meet the numbers target that it's supposed to present within within the quarters. So, so that's basically the significant rationale behind these mergers. But this does lead to operational hurdles and market misalignments. And the benefits of scale against the challenging approach of managing larger and more diversified entities needs to be balanced. And very few companies have been able to do that profitably. So, this brings us to the conclusion, which is the exploration of the major acquisitions is clear that we are witnessing a new dawn in the luxury retail, from Tapestry's acquisition of Capri to Kering's strategic expansion with Creed and Valentino, and from the transformative partnerships of Farfetch and Coupang to Frasers Group acquisition of Matches Fashion. The industry is undergoing significant metamorphosis. And as we move forward, it is poised to navigate a complex and evolving environment marked by the blend of traditional retail principles and innovative digital strategies. Now, in this dynamic landscape, adaptability, strategic foresight, and a keen understanding of market trends is the key. And we will be looking forward to what happens in the luxury market in the next 1 year or so. And when we do this kind of recap in 2024, let's see how much things change and how much things remain the same. So that's it for now. I look forward to your comments on this, and do connect with me on LinkedIn if you want. My handle is Pallavi Sehgal. And in the next video, we're going to discuss another case study. That's Phoebe Philo. Last video, we discussed the case study of Jacquemus. If you did not see it, please have a look and let me know what you think about it. So that's it for now. Thank you.